All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here this week. So markets sideways to lower for the most part here on the SPY. If we take a look at a weekly candle, you can see we had this big thrust here. 1, 2, 3 weeks in a row, closing above that big red bar high from the week of March 6th. And then basically what you just had here is a little pause. So you have a big thrust like that. It's very common for the market to need to take a little bit of a breather there on that bigger time frame, and that's exactly what we saw. Now we can flip over to the ES because we did get the non-farm payroll data on Friday. And the futures were open for the morning session for that reaction. You can see the market had generally a positive reaction. So just kind of stuck in a range, and then we had a little dip there. The dip was bought, and we finished higher. So that did move the weekly candle on the ES to a slight kind of green there. So nothing crazy going on, but markets are holding up for now. So basically that non-farm payroll number came in slightly hotter than expected. I mean, it was 236,000 versus 230,000 jobs. And then I believe unemployment downticked from expected 3.6 to 3.5. So now odds of a 25 basis point hike in May have gone up to, I think, 70%. So that's a pretty high, percentage there. So it does look like the market's pricing in a little bit more hawkishness from the Fed. But, and you'd be surprised, or you would think, like, why is the market rallying? My theory right now is that we've had a couple of pretty soft, so the ADP number came in, the JOLTS data, the PCE data last week, all those came in on the much colder side, and it was looking like, okay, this could be going, we're getting closer to a hard landing. So to see kind of a slightly different prints, a hotter print, not super hot, just hotter than expected, to see that gives the market more of a thought that, okay, we could get a soft landing. I mean, obviously, you guys know I am not in that camp, but that's really what the market's looking at right now, is really just that, that hopium of the soft landing narrative. And so that's why you're seeing that positive reaction, if you ask me. Now, we do have a big number coming up this week. That will be CPI. So that will be on Wednesday. Obviously, that will be market moving as well. So we'll see how the market trades until then. Might be on the quieter side here. This week was definitely quiet. Lots of spring break. It's a holiday week. So lots of institutional traders have already taken off. And we may see a little bit more quietness in the first couple of days, Monday, Tuesday next week, as the market kind of waits for a CPI. So everybody wants to know what is kind of my outlook here. For right now, I think the market's holding up just fine, and I don't really have us going down really for the next couple of weeks. I could be wrong on that. If we get a big surprise on CPI, maybe the market panics. That's certainly possible, but I don't really have a ton of downside penciled in at the moment, and the market's acting well. As long as we have this kind of bullish structure here, we'll flip back to the spiders here. You have this up move, and you're just going sideways. As long as we consolidate sideways, we can consolidate for one more thrust up, and that's kind of how I have this market penciled in right now. That can change, obviously. This trend line could hold if we start to roll over and you lose 404 on the SPY, and especially that 50 moving average, we could go down pretty quickly. I mean, we left some pretty ugly gaps here on the chart that just are not healthy. And there's not a lot of support down to 395. So there is downside potential, but right now the market is acting well and we'll respect it. However, there's always a however here. So there's some pretty decent yellow flags starting to come up. Let's look at the triple Qs first. So triple Qs are also holding up okay. I'm inclined to think they do want to go up and test, at least fill this gap here, maybe even get up into this gap potentially. They're acting well, but inside of the Qs, semiconductors are not behaving well. And this is a yellow flag. So a lot of the move in the Qs, a lot of the move in the spider has come from big tech. Apple, Amazon, Google, Microsoft has had a nice move. But the semiconductors, and you guys know I love using the semiconductors as a leading indicator, they have not acted well. As you can see, we've kind of broke through. We've got two big rising wedge patterns here, one big one, and then one kind of on the smaller time frame here, going back to February. And we can see we actually broke through that on Thursday, and we didn't really recover. We closed above the low on Thursday, Thursday's low on Friday, but we did not reclaim that rising wedge trend line. So definitely showing some weakness. Another area that is weak is the IWM, the Russell 2000. Again, we look to the Russell for a leading indicator as well. Small caps are, they're very much a better indicator of breadth, and they are not behaving well below all four major moving averages there on the daily time frame and on the weekly. And on the weekly here, you've got a down move and now a sideways to up move. So this is a bear flag here on the weekly. So Russell not participating in the rally. Semiconductors, they're trying to hold up, but they are starting to slip as well. And another yellow flag, the Dow transports. So last Friday, we talked about this big thrust that we had. Nice power move outside. We got back above 14,139, which was that big weekly level there. And that really got completely faded this week. So we closed, well below 50% of this green candle. Probably about 2/3 of that candle got retraced by the close on Friday. And I mean, you got, pretty hard rejection earlier this week on Tuesday, and we did not recover. I mean, it did manage to hold that 200 moving average there on the daily, but this is not what you want to see when you break out of a bad, a bear formation. You want to see at least a flag or some type of a follow through, and we got a rollover. So transports, Russell, and semis, these are all major yellow flags. I don't think this is gonna, I think this market can hold up a little bit longer, as I've stated, but these are things we got to watch moving forward. If they really start to break down, you definitely want to get on your toes here in this market, because we could get into some serious trouble. But for now, I think the market is hanging in there okay. And as long as it just consolidates sideways and we hold up, we can make one more pop here, but then I think that's about it for this market, but we're a little ways away from there. All right, anyways, let's flip over to the Dow here. So the diamond hanging in there, same thing. If this consolidates, I would say about 340 is about your max move on the diamond there. There's a ton of resistance up there, but again, just like the spiders, like the Qs, if we consolidate further, we can push up. But if we start to, push back below, you lose 330. This is going to go right down to 325 and then probably 320 pretty quickly. But for right now, again, it's holding up okay, so we'll respect that. Over to cloud software, we already touched on the semis and the transports there. So over to cloud's still acting well. So you're still holding this green bar here on the daily time frame. We tested Wednesday and Thursday, and we closed above the low. So it's holding okay. Nothing's wrong with it. I'll still give this the upside bias to about 310. Maybe on overshoot, it can get up to 315 and fill that gap up there. But this is all dependent on the market holding up as well. All right, so we talked about semis, transports. I mentioned the transports there already. Not a good look there. Let's get over to bonds here. So the treasuries. ZT, it's hanging in there okay. It did come in, obviously. You can see the reaction to the jobs number, and we had a little sell-off in the 2-year. So again, obviously, market was kind of pricing in a pause a little bit, and then now it's kind of pricing in a 25 basis point hike. Nothing crazy. Everything's, the treasury market's holding up okay. Again, you guys know I don't see a ton of upside here. If we look at the 10-year yield, conversely, it would be downside. I don't see much below 3% at this point. That could, maybe we could pierce it a little bit here, but that's really all the downside I see at the moment. Same thing with the 30-year. We're looking at about 3.2. So right where this white trend line is drawn in, that's kind of the max downside that I see in the yields right now. But we'll see what we get. The CPI number comes in super cold. You could get a rally in bonds, and obviously stocks may or may not like that. We're kind of in between that period where bad news is good news, and it's getting to the point where bad news is going to be bad news again, but we're kind of in that transitional period depending on what the market's kind of feeling that day. I think the market kind of wants Goldilocks, so it doesn't want a too cold of a number. It also definitely doesn't want a hot number either. I think it just wants numbers to be kind of in line with expectations. But anyways, bond market holding up okay for now. Over to housing. This is another weak sector here. Let's look at XHB first, as always. This was weak, down 70 basis points on Friday, with the market up 40 basis points, right? So definitely a noticeable underperformance there, and really all week long, right? Just looks like the transports here with that big up move. Nice rally last Friday, a little pause on Monday, and then really just down and almost made a new low here on Friday. So housing finally starting to act as if we're slowing down as if we're going into a recession. I mean, the home builders have defied gravity for quite a while. If we look at the ITB, I mean, this is still rallying up, basically near 52-week highs. It's not that far off 52-week highs, but finally starting to come into reality here, and the realization that we're going into a recession is kind of coming into play here for some of these housing stocks. VNQ has been on the weaker side, as we've noted. That is actually close to 52-week lows, but it does have a decent bullish pattern here on the daily. I'll give it the upside bias to 84, maybe 85.50 right now, but that's all I have in the cards, and that's of course dependent on the market holding up. Over to financials, all important financials, definitely the fulcrum of the market for sure. XLF hanging in there. It got back above the 20 moving average on the daily time frame by the end of the week. Still not a great look, not a great pattern here. The financial crisis is far from over here. Again, I don't see a ton of downside here in the near term. They will go lower eventually. I'm also not seeing a ton of upside here. If you have a panic sell-off like this, you'll know the bottom is in, because it'll V-shape like that. And that has not happened. We've just kind of grinded at the lows here. Now we are still very oversold here. On the weekly time frame, when we are into a major support level, you see that it took the market basically a year to get through this level, and it's already very oversold as is. So this should hold up for a little while. Ultimately, these are going lower. That's really the case here. I mean, you can maybe play them for a bounce, but I don't think there's that much upside in the fins right now. Here's the KBE, large bank ETF. Really the same chart, but financials still under pressure here. They acted a little bit better this week, but I would avoid them for the time being. XBD here, broker dealers, this is still a weekly bear pattern. And what a great rising wedge that was. Great breakdown, and now sideways action there on the weekly, so that is setting up for a move lower. All right, over to crude here. So obviously, beginning of the week, OPEC production cuts, that was the big headline. Nice gap up for crude futures here, and it held the gap. If this can consolidate further, then it has upside into that. Remember, we talked about this level for a long time, that 82.72. So that's going to be your big weekly level. There's another one just above that, right around 85 and change there. So I've got that penciled in. And you still have the 200-day moving average. So if this has still got quite a bit of headwinds on a technical basis, just above these pivots here, what if it can consolidate? It can make a run at them. My issue here with crude in kind of the near to medium term is I never like this type of a gap, especially when you consider this is, it's a weekly gap, it's a monthly gap, and it's a quarterly gap. It would be highly unusual, to say the least, for this to just sit here and crude to go to new highs. I think that this gap will at least get filled here at some point in the near term, but crude, nice move there off the lows, and we'll watch that going into next week. If it consolidates, it's okay for now. XLE, kind of same thing, pretty big gap there. It did come in off the highs towards the end of the week, but it's holding up okay. Again, if this consolidates, it can probably make a run at about 89 or so. That's really all I see in the near term. And then of course, again, you do have that big gap there on the daily, so just be careful with these. XOP, pretty much the same thing there, although it never got back above this trend line. Remember, we were watching that for a long time, and you can see, I got a lot of lines on here, but you can see we broke down, and where did we go? We're right back into that, and right back into that 20-week moving average as well, and that's where it pulled back from this week. So nice technical action working out there on the charts for the XOP, but nice gap up for the oil stocks. And then OIH, that had a pretty good fade here off the highs as well. I just don't like this pattern here. It's just, look at the whipsaw here, 330 down to 250, 255, to 280, 280 to 250. And this is all in a week or two. And then, 250 to 300, and then 300 to 275. Lots of whipsaw, lots of chop. I'm avoiding this until the pattern shapes up. But, nice gap up, but it did fade pretty sharply off the highs, and it did close back below 280 on the weekly time frame for what that's worth. Nat gas, not a whole lot going on here this week. It held the gap up from last week. We had a little dip on Friday, and then it finished off the lows there. Again, we're looking for a seasonal kind of bottom here in nat gas futures. Typically, the bottom comes in right around the end of the first quarter after a sell-off into February and then into late March. But we'll see if that can get going into next week. Dollar index, DXY still holding up okay. You had a little bit of a kind of a micro kind of bear flag here on the daily. That did break down a little bit. And again, I'm still looking for kind of a double bottom level on the DXY, but it's hanging in there for now. This is kind of where I see the major support, right? Or, maybe pierce of double bottom, maybe even into that 100 handle or somewhere close. But dollar index holding up okay. Won't just leave it at that for now. For uranium, CCJ, again, pretty choppy week here. We had the big sell-off. We came down, up, basically tested the 50 moving average, and then we rolled over. And on Friday, we bounced back and hung in there. I will say the URNM, though, we've been watching this trend line for a while, and it tried to get back above it last week, and even on Monday, on the gap up, and it sold off. So to me, this is a rejection here. So it does look like the URNM at the very least is in kind of backing and filling mode. I would probably look for about 20, we'll call it 25 for now. That's probably where it wants to go if it does continue lower. But you do have a potential weekly bear pattern here on the URNM, so just be careful with uranium this week and next week. DBC, interesting price action. So we talked about the possibility of a fake breakdown, and that happened. So we have this descending triangle, equal lows, lower highs. We pushed through that. And, we broke down, and that was really the low right there. And then it rallied up, little micro flag, and then a big pop. So if this flags, this can go higher here, but I like how you negated this breakdown level, and then you got back above this trend line. So that looks like a fake breakdown there to me on the DBC, and that's acting well right now. So decent move there for ag, and we'll see if this can consolidate. This can go higher. So DBC, interesting price action this week. All right, over to gold here. So gold still remains a powerhouse, had a big move on Tuesday, and then just kind of came back in, a little bit of a pause candle Wednesday and Thursday, but I don't see any issues here. It is still overbought. Silver, same thing. I mean, this is over 25% move here in like 3 weeks. So that's a big move, but it is a commodity, and that's, just how they behave. Interestingly enough, we are now above this trend line on a weekly close. So big move there for silver. You're going into this red bar though, so lots of resistance up here, and you are overbought in the near term, but silver is acting well, and we got to respect that moving forward. It looks very good here at these levels. Probably, needs to pull back at some point, but nice power move there this week on silver futures. They've had a really nice move there. All right, over to platinum here. They had a nice move as well. Nice breakout earlier in the week, and then it retraced on Wednesday before getting a bounce Thursday. I'll still give this the upside bias to about 1040, maybe 1045. I talked about that last week. I said if this shapes up a little bit more, which it did, this can make one more thrust and attack this red bar. So that's probably where it wants to go. A little bit more of a, I don't like that candle so much on Wednesday, but it did recover by Thursday. So it's hanging in there okay. There's nothing wrong with that pattern. Over to copper. Copper actually breaking down a little bit. So last couple of weeks we've been talking about this green bar and then the sideways flag. This short week's got me all thrown off here. This is a Tuesday here. So Thursday, Wednesday, Tuesday, we broke through that and we closed below it. So that failed. So now we're still looking for 375. So originally I was thinking, okay, we got a flag. I'll give it the upside to 420. And then I'm still looking for 375. But at this point, it looks like we're not going to get to 420. And we're probably going to consolidate here sideways for a push down into that area. But that is a good support level for copper futures. Okay, lastly, over to Bitcoin here. So Bitcoin, nothing really new to report. It's holding up nicely. Again, still got a green bar there on the daily. And you got sideways action now. This should try to get going sometime soon, though. I would think you have that 20 moving average is already caught up to price. And you're not, usually when you're going to break out with a pattern like this, once that 20 moving average catches up, usually you should start to take off, and that hasn't quite done that yet. So I'd like to see this get going kind of sooner rather than later here. But it's holding up for now. We'll give it the upside bias until proven otherwise. You lose these pivots though, excuse me before I mess these chart up. There we go. If we lose these pivots though, then you headed right back down to 25. So just be careful of that. But Bitcoin's hanging in there okay. Can't really say anything bad about it right now. All right, lastly, back over to the spiders here. So again, near-term market is holding up okay. I don't see any issues right now. There are a few yellow flags, semiconductors, transports, Russell 2000 showing lots of weakness. And of course, the financials are still very weak. And this banking crisis is not over. It's basically just on pause. They put a Band-Aid on it. And the next shoe to drop here will be, well, there's two. One will be the market's going to realize we're going to have a really hard landing. And number two is we don't know what the next thing that is going to break is, right? So eventually that, that cockroach will come out from under the carpet, and we'll figure it out. But for right now, market's behaving well. And as long as we have light volume and we just continue sideways here, we can put in a bullish pattern for one more push up. That's really all I have in the cards for the market, though. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Subscribe to the channel. Come find me on carnivoretrades.com. You guys take care. I'll talk to you all next week.